Hey guys, what's up and welcome to a new Tesla update video. So today, let's go over Tesla. The week is finally finished and let's figure out what has happened so far and what we can expect not only for next week, but also next week being pretty much the exact final week of the month. And I think even the quarter, if I'm not mistaken. So gonna be a pretty wild week next week, and I think July will be a pretty wild month as well. But let's get into it. If you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. Make your own decisions, to do your own research, and my membership section for $2.99 a month is live. The link is down below if you're interested in signing up. We're over like 120 members or something like that now, and I share my intraday thoughts on Tesla pretty much as it moves throughout the day. But all that being said and done, let's just get right into it. And let's discuss what has happened to Tesla. So down just over 3%, putting us at about $256.50 per share, which of course, compared to the market, for the most part, it was actually performing in line. But then towards the end of the day, definitely a bit of an underperformance with a massive sell-off towards the end of the day. And yeah, definitely a little bit of an underperformance, but I wouldn't say it's anything absolutely severe. Now, what does this mean moving forward, right? Is this bad? Is this good? So first and foremost, we have an inside day candle, right? This daily candle, of course, trading completely within the range of yesterday's candle. Hard to say what this really means. I mean, usually to me, I look at this as a reversal signal, but the way it's happening and the position that it's in and the fact that it happened after this situation up here, you know, I think it's slightly more bearish, but like I personally, just my opinion, wouldn't put too much weight into this setup right here with these candles. I wouldn't like look at it too strictly or too, you know, too intensely, I guess is what I'm trying to say. So not a lot of opinion on it personally, just personally, but let's go over to the 1 hour. This is where things started getting, in my opinion, a little more interesting. So in my membership section, I did talk about how potentially having a head and shoulders forming, right? As you can see here. So I think that's roughly what we're forming. So this is the left shoulder. We have the head. And now we essentially have the right shoulder right here. So I wouldn't be surprised maybe if we get potentially a little bit more consolidation, but this is where the head and shoulders pattern, and it's a pretty reliable pattern. It's one of my personal favorite patterns, that the cup and handle pattern, which, you know, remember we talked about the cup and handle. Oh, I said the QQQ, which again affects Tesla. If it comes up to this, or I think it'll come up to 370, probably get rejected, and then start forming the cup and handle potentially to as low as 330. That's kind of what I'm foreseeing happening right here, right? And I still think that that's going to be in play. Again, it doesn't mean it's going to happen in literally like a day or two. It'll take obviously some time, but something that I definitely would not be surprised to see happening. Which again, if it does, will bring Tesla probably back down, maybe 230, maybe as low as like 215-ish, give or take, right? So that's number one, right? So, you know, cup and handle, the reason I brought that up is because the cup and handle pattern, which is what I think the QQQ is forming, is another pattern I personally really like to look at, right? But in this case, of course, on the 1 hour, 30 minute, 3 hour, whatever you want to call it, we do potentially have that head and shoulders pattern, which of course is a bearish pattern. It is a top signal pattern as well. After a rally, you set up the head and shoulders, and you of course follow through to the downside, which you always have a rough neckline. Now the neckline is a little confusing because of these two candles right here, but I would personally say the neckline is anywhere between 250 to potentially like 247-ish. That to me is the neckline, the most important level for Tesla to hold on or to the downside. So speaking of which, let's talk about the most important levels, right? What do both sides of the traders or of the trade want to see, the bulls and the bears? Let's start with the bulls first. What do the bulls want to see to potentially still come up to maybe about 280, right? I still think that's in play. I don't think that's completely out of the equation, and I still think Tesla can potentially come up to as high as about 275 to 280. Well, what do they want to see? What needs to happen for that to, of course, occur? So I talked about this over here in my membership section right here. I think it was this post right here. Yeah. I pretty much said it in this post right here, how, you know, the 265 level is the most crucial level in my eyes. And we came up to a pretty decently close to a 263 almost, right? But that's the level that we got rejected at yesterday that I talked about. And that still remains to me being the most important level. We pretty much came up to gap fill this level right here from yesterday's close, which, you know, we got close to it. I wouldn't say we gap filled it, but pretty darn close. But 263 is, you know, a pretty crucial level because that is the gap fill, right? Usually gap fills tend to be as a resistance or support, in this case, resistance. But more importantly, again, 265. As long as Tesla, to me, in my eyes, is below 265 and especially below 260, it's bearish. I view it as being pretty bearish. But again, you know, you can have times where it falls below, then it comes back up 260, right? So I don't view 260 as that important compared to 265. It is important, but you'll have these kind of, you know, weird moves like this throughout the day, right? But 265 is the most crucial level. If Tesla breaks above 265, I think that's where it unlocks the potential to fly up to about 275 to potentially even $280 per share. That's what the bulls want to see. They want to see 265 for break, and then we make that move up, which if you, let's say, wait for that confirmation, then go in from there, it's a potential 5% move, which isn't too bad, right? Decent trade, actually. But to the downside, like I said, the most important levels to the downside are essentially breaking below, in my opinion, 250 being the first level, and then about 247-ish being the second level. Those are extremely crucial levels, right? Even falling below like 255-ish is already kind of, a little bit scary in my opinion, but especially below like 250-ish, like the low 250s and about 247, which is the two lows that we roughly set around these two candles right here. That's when I think the free fall will happen, and will probably come down to gap fill around this mid to low-ish $230 per share. And then we can see how it reacts from there, potentially still, of course, opening up the possibility of coming down even to as low as 215, right? That is, of course, very possible. Again, the reason I say 215 is because it is going to be two things really. Number one, it is going to be more or less a retest of this, the teal line breakout, which again, if we come down to it, let's say somewhere like this, right, it will be somewhere around right here, which is pretty much around 215, which will happen sometime in July potentially, or like, early July to mid July, somewhere like that, right? The other option, or the other reason, is because I've said this many times, but to reiterate, is of course this whole area right here was essentially a massive area of resistance. We came up to it several times and constantly got rejected. Naturally, now that we broke above it, obviously old resistance becomes new support. And again, that is, actually, I'll just take this and drag it over here, right? Maybe we'll take this and drag it over here, right? This whole area now essentially becomes an area of demand, right? Before it was supply, now it's demand, which again, anywhere between that 220 to potentially even very low 200s, right? That whole area to me becomes now demand. On top of that, if we also take a look at the RSI on the daily, again, pointing straight down, setting up some bearish divergences, the 1 hour as well, right? The 2 hour, the 3 hour, right? They're all setting up some bearish divergences, definitely showing signs of momentum slowing down, which again, I want to make it clear, is perfectly normal, right? And nothing wrong with that for the bulls, absolutely normal. If anything, I would argue it's better for the bulls that they see something like this happen, that this move finally calms down, because the more violent it moves up, the less likely not only is it going to hold for a long time, but the less like, I don't know, weight behind it, if that makes sense, there is, at least in my eyes, right? You know what I mean? So that's kind of the way I look at it personally. So I don't know why it's also, that's fine, there we go. Right, so that's the way I look at it. So again, perfectly normal move, perfectly normal to reset, to cool off, have new buyers start stepping in and launch this thing up one more time, right? Perfectly normal. And the last thing I want to mention is the fact that I usually see Mondays and Fridays tend to rhyme. Not always, maybe 7 out of 10 times, but usually if Friday's a red day, Monday tends to be a red day. It doesn't have to be the same red, it could be more, could be less, but red nonetheless, and vice versa for green days as well. So because Friday obviously was a 3% red day, I personally expect Monday to be red as well. But the issue is if Monday is also red and we do have, let's say, another 3% day, just as an example, let's see where that takes us roughly, right? That will take us roughly to pretty much that crucial area I just talked about right now, being that 250 to 247-ish level. We'll pretty much get right back into that area, and then we'll see what happens, right? If we break below it, like I said, I do think it's going to be a pretty massive fall, pretty quick fall, also probably to around this gap fill area into the 230s, which is the area the first real area I'm really eyeballing to start really, entering. But also going to have some, cash, I guess, if you will, ready for the levels all the way down here. Now, I do have a small bullish position still open, the cash secured put from yesterday that I'm completely holding on to, no issues whatsoever. That's my anti-FOMO, if you will, position. But again, it's only like 5% of my portfolio, so I'm kind of, chilling with that, right? Nothing too worrisome for me. If it falls down and I have to buy, no worries whatsoever. But that's kind of what I am seeing. The VIX finally catching a bit of a bid. Kind of, well, not really a bid, but the VIX setting up and pretty interesting here. A lot of people say you can't do TA on the VIX. I personally think you can, but regardless, it is setting up potentially a reversal candle here in my opinion. Again, could be a potential reversal candle right here setting up for the VIX, which again, if it does start rallying back up, that should be pretty bad for the market. And I wouldn't be surprised if VIX actually comes back up to somewhere around the 16 to 15-ish level, which again will put pressure on the markets in theory. But that is what I am seeing right now, ladies and gentlemen. Let me know what you think down below. Taking a quick look at the weekly candle, you can see, it's a little bit of a doji candle. I wouldn't say it's a major doji candle. It is a bit of a thick one, but definitely showing more selling than buying pressure by far, but definitely a little bit of buying pressure coming in. So you can make an argument if you believe it to be a doji or not. Again, kind of looks like a long-legged doji, but the candle itself is a little too thick in my opinion for that nonetheless. But nonetheless, it does look like an area that Tesla is going to have issues. Not surprising whatsoever. We talked about this red line many times, and that is essentially where we bounced off, and I definitely would not be surprised if this is where the cool off begins. But again, like I said, it's not going to happen, you know, overnight. It doesn't mean it just has to plummet from here. It might be complicated. It might be difficult. It might just go sideways for a bit before doing it, right? It'll make it confusing. It'll make people doubt it. It'll make people, you know, second guess it, etc. And it'll pretty much find a way to make as many people as possible lose or FOMO in on the trade in a very bad situation and bad spot. That's just how the market works, right? But nonetheless, that's what I am seeing. So let me know what you think down below. Thank you so much for watching. And of course, I'll see you all on Monday. Also, I forgot to mention, the final thing that could be potentially a catalyst for Tesla falling is, of course, it's kind of a meme, but Elon and Mark Zuckerberg are talking about going into a mixed martial arts fights, like essentially a UFC fight. I don't know. If it happens, it happens. I'm not going to lie. If it does happen, I do think that will ironically put pressure down on Tesla stock, because people are going to be worried. Oh my goodness, like, what if something happens to Elon? What if something bad happens? And I think that will put a little, I don't think it'll be anything crazy, but I think it'll put a little bit of pressure on Tesla stock to the downside, right? Which could be, you know, part of the reason why we potentially, you know, get a bit of a cool off as well. But nonetheless, thanks for watching. And of course, as usual, see you Monday. Peace.